Retail stocks sinking today, dragged down big time from very disappointing earning and guidance from Target, which had one of its worst days in nearly 20 years. Welcome, everybody. Ari Wald with Oppenheimer, Boris Schlossberg with BK Asset Management joining us now. And Ari, we look at a chart like this, and obviously one of the biggest drops. I mean, the chart just does that. Technically speaking, how does Target look? But also, when you analyze a chart where you've got a one-day, massive drop, an elevator down, what does that do to the analysis overall?
Well, it signifies a market in decline, and those are the markets we like staying away from. And I think you've described the don't catch a falling knife. So we recommend staying away from the traditional retailers. We think they continue to underperform, and to make that case, I think the way you want to look at it is charting the spider, the retail spider XRT, relative to the S&P 500. Which would you rather buy? And we can see this falling line is indicative of underperformance. And we think the next stopping point on this for XRT is the 50% retracement of retail's prior gains from earlier in this bull market cycle. This would indicate another 5% downside risk versus the market. We think there's another 5% underperformance here, and we accordingly recommend selling this group and staying away from it.
Okay, selling the group of retailers. Boris Schlossberg, listen, retail, I'm not saying I agree with, or it's not my job, but I will say there's not many sectors out there where there seems to be as much confusion as retail.
They're getting decimated by tech. And today's announcement from Target was, to me, especially disappointing, because Target is basically hanging all of their strategy on price competition and going down market on lower price. And I think that's going to destroy them, because Amazon will kill them on low price anytime, anywhere. In fact, I think the only thing that works in retail right now is improving experience. Ironically enough, maybe taking a page from Amazon to create an experience where you never see a cashier, where it's just friction-free shopping. It's all sorts of things that they need to think about that are completely different from how the retail experience has been over the last 50 years. And the fact that none of them are focusing on that is very troubling, and to me, it just says sell, sell, sell. I would not want to be long Target. On the other hand, I do think that actually Walmart is doing a much better job, and their acquisition of Jet.com on the digital side was very, very smart. So if I'm going to make a trade, I would rather be long Walmart, short Target going forward.
Well, and Walmart, that would have been a good trade. I mean, Walmart has outperformed Target this year, over a year, over 5 years, and over 10 years. So the track record. Go ahead.
And I think that pairs trade has more potential to go that way.
Okay, yeah. You think about what Target said, guys. Thank you very much, which is they're going to spend more money, but they're also going to cut prices. That could be tough for profitability. Right. Ari and Boris, thank you both very much. Folks, check out the live version of Trading Nation on CNBC's Power Lunch. I'll see you there for that as well. Take care.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.